What's going on, guys? Zach and Spence here from iTrendz coming to you guys with a watch list video. It is the 31st of September, almost October. Wait a second. It's the 31st of August. It's almost September. We're here. We have day or monthly closes today that we're going to take a look at. We're going to take a look at some short swings that we're taking that we are already in, and we're going to be adding into, and we're going to be riding out over the next few weeks and months as we just had a major structural break in the market recently. So really quickly, let's just get right into it. We're going to rapid fire here over some news. We're going to rapid fire over some stocks really quickly, and then we'll get into the swings. So really quickly, towards the end of this week, today is Wednesday. So tomorrow we have some jobless claims, non-farm productivity quarter over quarter, which is an important report. ISM manufacturing PMI and unit labor costs. It's all about at 8:30 a.m. The ISM is at 10. So those are some news reports to pay attention to. If you ever have any type of interest in knowing what news events are coming about or how to find them, just go to Bloomberg Calendar, or you can go to Forex Factory as well. Those are two really good sites to find news. On Friday, we have very, very important. This is what everybody's going to be paying attention to. NFP, non-farm payrolls. That is at 8:30 on Friday. That is certainly going to throw the market for a whirlwind, either up or down. We also have unemployment rate. So those are the two big things that we're looking for on Friday. That is what is going to move the market going towards the end of the week. We also have a 3-day weekend. Labor Day is this weekend. So next week will be a short week. Personally, we're looking for a little bit of an RSI cool off next week, which will be nice because we'll be able to get in our shorts and then continue to ride the trend down. So anyway, let's go forward. First, we can start with QQQ. So on Friday, we had a major break. We're on the 4-hour here. On Friday, we had a major break of 312. That was a huge structural break. Before that, that was a big support for us in the market. We broke right through it. And ever since then, we've been pretty much straight down. We also have this trend line, this horizontal or diagonal rather trend line that was stemming from the lows in June. And we actually just broke that today. We had tested once, I believe yesterday it was, or 2 days ago. And then now we have broken it today. We are actually down $3 in after hours right now as NVIDIA just announced some really bad news for us. We are now at 296 on the QQQ. So this chart looks bad, right? Obviously, the chart looks bad. We keep making lower highs. We're not going to be able to make higher highs here. And this chart is looking quite bearish. So we have a lot of bearish swings that we're going to get into. Before we get into those, let's just quickly do a 1.5 minute, 2 minute check on all the monthly candles. So for first, let's go over QQQ here. We have a really big rejection of these highs at 334, just above this 330 line that we talked about so many times on our watch list videos. Big rejection here. And we broke through 50% of this previous monthly candle. So July was pretty much all buying. You can see that all of August was almost all selling. And selling piles on itself. So we are likely to see a continuation of selling going back down towards these lows at 279 and then maybe even much lower here towards this wick at 260 and then maybe even lower later on in the year, 225. So anyway, let's keep on going through here. Some of the big guys. Google first, not good monthly candle. This is looking really bad. We're actually forming a bear flag on this monthly candle, breaking down below this. It's really kind of a pennant here. Let's draw this trend line here, breaking below this 104.50, 105 zone. I mean, Google's got a long way to go.
Yeah, spicy.
Super low. Not 70 right off the bat, but this is the trajectory, right? 70 to 80 zone we could see over the next few months going into next year, especially with September being notably one of the worst months in the market as well. We could see a lot of pain all the way down to perhaps even breaking 100, going to 90 on Google. Let's go to Apple next as another big boy. Apple, of course, is holding the market up here. Had an amazing month in July. Actually, way too crazy. I think it had 7 weeks green in a row, but still very large rejections in August of this 175, 176 level. Crazy that it's all the way back down at its 156. We can easily see Apple at 155 this week, dropping another $1.50 by the end of the week, and 150 is a very attainable target by next week. 150 though, you have to assume that there'd be some type of bounce, but essentially underneath this 165. You're really not looking that good for Apple. It can bounce around all at once in 150, but off of 150, excuse me. But the fact that it's not staying above and strong above 165 is not a good sign. Let's keep going here to Microsoft. Microsoft, same exact thing here as Google. Just a little bit held up, just a little bit more though. but we have the same exact bear flag here where we break this 243-ish, 245-ish zone, and we're just going to leg down and leg down. We could see Microsoft super, super low in the next coming months, maybe even around this 175, but this 200 area is definitely attainable. I'm actually going to draw this box out just so I have it. It's 200 to 212. That is really crazy right there. Lots and lots of selling pressure coming in from this month, in the month of August. Big rejection, this 294, couldn't even make it to 300, and it pierced through 50% of this previous candle, so that's really bad as well. Let's see, Microsoft, Google, Apple, what else we got, Nick? Nvidia. There we go. 50% broken through here on the previous candle, almost a full bearish engulfing here on the monthly. This is bad. Also, Nvidia is down almost 10 bucks. Nvidia is down almost $10 after hours, so this is actually much closer, or much lower rather, excuse me.
And the reason they're down over $10 after hours is because they cut their guidance another $400 million with China banning certain of their products being sold in the country. So you see that being down $10. AMD is respectively down 4 and change itself. So it'll be interesting. And looking at China creating some more bans and just some more banter, I think we see some more downside with any of these semiconductors and China in general, which is going to keep dragging us down. Another on the bear side.
This is a bad little bear flag here. It's kind of like it's slightly a falling wedge here, which wouldn't be what you would want to see. Falling wedge in a downtrend usually provokes a reversal out of it, but I mean, this is pretty bad. Just going economic wise and how the economy is necessarily, we could see Nvidia down to, with their revisions down, etc. The pressure that they're under, we could see Nvidia down low. What do you think, Spence? Like
120 if you want to be conservative, $80 if you want to be real.
Yeah, right. This is like bad here. What was this? Okay, this is 2018. What was COVID? COVID was right here. They didn't even really drop for COVID. Now, I don't know about 44, but yeah, this 80 is definitely a super low. Let's go to AMD as well. Not a good candle to see. Holding up a little bit better than NVIDIA. Personally, we think that AMD is just a little bit stronger than NVIDIA just because NVIDIA is a little bit more focused in gaming, and obviously that's where they're getting hurt right now. AMD has a little bit better diversification, excuse me, when it comes to their markets. However, we did see in August a break of 100 and then a fail of 100. And then in June, we also saw the same thing where it broke 100, back tested this 110, and then failed to stay above 100. Super bearish for AMD. Unfortunately, they look like they're going straight to $60 over the next couple months here. Obviously, we've got quite a few levels in between here. First stop would be the 72 range, the low that we made in June. But regardless, July, excuse me. Regardless, this is not a happy chart here. So anyway, these are some of the monthly candles. And we just want to bring this to you guys because, of course, monthly candles are very important to look at every month, of course. Sometimes they don't really tell you much, but something like this where we just had a previous month with lots and lots of buying, it's important to see how much these current monthlies that just ended actually pierced through, if they engulfed or they just pierced through the previous candles. So anyway, let's get on to some of the swings that we're going to talk about. I'm going to go over 3 here. Spencer's going to go over some as well. And like we said, we do have positions in these already and or are building into our positions. They're still good trades to enter into. And we'll be looking at some price targets and take profits as well. So the first one I want to go over is Snow. So Snow is super propped up here. Sorry for the lines above here, but Snow is super propped up because of its earnings. And really, it's a software company. It's going to be under a lot more turmoil inside of inside of economy with lesser demand coming from the consumer. Software is definitely going to get hurt. They're going to have to lower their prices guaranteed, and businesses are not going to be able to afford them because the businesses are going to have less customers in general. So some of the software they're not going to be able to afford. The chart itself speaks for the trade. Very bearish here as you're breaking down through this massive imbalance that was created during earnings. Take profit number 1 is around this 171.53 area. You can see that today we successfully broke below this 179.26. That was actually after hours, I do believe. Just now, this 179. I don't know if I said that correctly, but this 179 was definitely a big little level that I wanted to see us break through. We could come back up into this 185 area, in which I would just add to my contracts and take it further. We'll get to the contracts here in a second. Take profit 1 170, 150, 160, 142 for take profit 2, and take profit 3 is 148.79 all the way down at this low. We could see it lower. However, I have 916 contracts, or 922 or 99, excuse me, next week contracts, 155 put. They're super, super cheap. We picked them up at 50 and we averaged down at 35. And then drop the average down off. And so now we're only down about 10 cents on these contracts, which is not very much at all, given that we have a whole week's worth of time on these, and we're expecting a little bit of a rumble in the coming days. So anyway, let's see. The next one I want to talk about. This is a position that I have yet to have taken yet. I think Spencer took some January shorts on this, but he can talk about that if he does. So plug here is propped up, to be honest. There's really no reason why plug is up here and NASDAQ is down here, right? I know that they had some bullish sentiment off of earnings, into earnings, and then off of earnings, but let's be real. They're definitely going to go through a lot of turmoil here, and the chart says it all. We are making this big M pattern, right? This big M pattern essentially all the way back down to 18. Your neckline would be at this 25.59. I am not going to wait for that to occur. I'm really watching this 2760 level. So if we break underneath this 2760 level, I can see us trading back down to this 2634 very quickly, but this is a swing trade. I'm not looking for that. First take profit / slight trim would be at this 25.59. Second take profit 24.16. Third take profit 20.74. And if you have enough time, you could potentially see this 18 level. I was looking at the 10/21, October 21st this year. 20 puts, they're 61 cents. Again, very, very cheap. So these are super, super nice contracts. I'll go over one more Starbucks here. This is another trade that I have yet to put on. I'm looking to put on either tomorrow, any type of bounce where we can get ourselves back up to this 85 level, or maybe just add a contract in these lower levels or a couple contracts and then add some more contracts back when we get back up to this 85 and retrace and then eventually fail and then continue to come down. So right here, I actually don't have any take profits on this. So let's get rid of these lines. Honestly, we don't need these lines. Boom. So take profit 1. This would be my desired entry right here at this 84.11 level here. This first take profit down here at this 80 level. Second take profit. I'm really just finding previous supports, right? Previous supports will become supports in the future as we break down towards these levels, right? So this previous support will become a continued support later on in the future. If you have enough time, you could actually realize 71 on the stock. However, that would take a lot. You'd definitely have to take a lot of time and or just have a lot of news drop in the stock. I was looking at these 10/21/65 puts. Again, super cheap. They're only 40 cents. So these are all pretty small contracts, which is nice because you can buy a bunch of them and you can drop them up. Like, for example, we've been trading these PayPal shorts here that I have over on the left. Next week, 85 puts, and we traded them. We picked them up at 60 cents. Then we dropped them. Then they dropped to really low. We averaged down at 35 cents. And then we dropped that entire position off at 73. We picked it up today at 27. Then we dropped it off at 45 and 52. So we've just been playing these small contracts over and over again. So we've been making really, really nice trades off of these smaller contracts. So it's really, really nice. Anyway, Spencer, go ahead and go into some of your swing trades.
I was actually pull up Starbucks again. I'm actually in the 80 at 5 puts for January, just being super aggressive. Working into that, actually currently up 14% on those that I picked up today. I'm actually looking for just a short-term swing. I'm actually looking at the 80 puts for 916, down 20% on a pretty neutral day. Just in about $1. That's something I'll look into. Obviously, Zach's pretty spot on with those take profits. I got a little higher. 81.5 is going to be my first take. And then 81.55. And then my second take is going to be at 78.92. So relative same, just playing tops and bottoms there. I think another one that I'm looking at is Apple. That's going to be a key for me. Apple bottom target's going to be 150. Looking at those 916, 150 puts. I know they have their day that's coming out, but just with weakness in NASDAQ, Apple is going to just generally take a hit because that's where that safety is. And if people need to adjust, they're going to first take it out on Apple just because of how bounced up it can be. Now, Apple fair value, in my opinion, is going to be around that 142.5 range as far as fair value, as far as I can see it falling all the way down to. It's going to have some pretty crazy volume pushing through 150. I know they did change their manufacturing over to India, but just with this market weakness, I think we'll see a pullback. So this is one that I'm just watching too, because if this starts breaking even more, which it has held up relative to the rest of the market, this could create that tumble that we're looking for. And just in general, what we were talking about, Zach and I, previous before we actually started this recording, is that we're looking for catalysts that get you to buy into this market. And we just can't really see it with unemployment, CPI, and with Powell also keeping those rates at 75. There's just no real reason to come in, and people are more like taking profit rather than entering into this market. Next one you pull up is BABA. I think that China, we are going to see a downgrade on China stocks just with the conflict with that Taiwan drone they try to bring up. I am looking at some 90 puts for 916, currently in the 95 weeklies that have been rotating really well. Be careful with these contracts, especially with the weekly contracts. They have been moving relatively fast, meaning that we swung them overnight at $1, went down, averaged down at 65 cents, currently at 164 a contract. Just be careful on those weekly contracts, but we are looking at those 90 puts for 916. Relative downside on BABA that I can see if we did have a pretty big pullback is around that $87 for my bottom on BABA. So that's one to keep a look at. Walmart is actually another one. I've been playing the 132 weeklies with the group. It's one of those contracts we've had to work around. Like I said, started at 90 cents, came all the way down to 54 cents the low, $1.08 at the high. So just be careful when you're looking at that, those contracts or playing those weeklies. I'm actually looking at the 130s that I'm potentially going to enter in tomorrow. I am in the 130 puts for January, up 6%, but I'm looking to add those 916s. That's the date I'm looking to pretty much target out with unemployment being weak. That's the only last kind of stand that we could see this bounce other than that short week coming in as well. I think we're going to see a sell-off continue into the end of the week. And last but not least is Disney. Disney is a name that we really couldn't. I mean, I was really surprised when it broke that 100 level going towards that 95. There was a report out from Bloomberg that they had $5.42 billion in sale, which is their highest quarter ending July 2nd. So that was something interesting to see report. But that being said, streaming services have been getting hit across the board. So I'll be looking to take some 100 puts out in January. Relative short side, I'm looking at some 105s for next week. So that's just something a little on the short list. Like I said, loading those January longs, playing it short, just putting those long hedges out because we have broken some key levels, not a lot to bring us back. So if we don't bounce, come with this unemployment rate on Friday, it's just going to create another leg that we don't want to see. So that's all I got to say this week. Hang in there.
Yeah, hang in there.
Down.
So these are some
hang down. Yeah, hang low.
So anyway, this has been our little update on the swings. We're not really we're not bringing any day trades per se, honestly, because it's been nice. Like for the both of us, Spence and myself, and also some of our analysts, we've been swinging a lot with recently. It just makes a lot of sense. Like some day trades, but more swings. Just sit in the swings. Excuse me. Add to them. Trim them a little bit. Just you're taking profits. It's just very relaxing and very nice, especially on the way down. You just kind of set your long shorts in and you just kind of sit in them, and it's very nice. So anyway, with that being said, it is always important to remember that you should be actively watching your swings as well. Just make sure that you are watching them and watching for your key levels. You don't want key levels to be broken either to the upside or the downside, regardless of whether you're in longs or shorts. And then miss your potential exits, and don't second guess yourself. You put out the to take profits there for a reason. So take profits on the way down that you set for yourself. Don't try and just move the trade as the trade is moving. All right, you have your plan, stick to your plan. But anyway, this has been Zach and Spence with iTrendz. Hope you guys got some value out of this. If you did like the video, please drop a thumbs up and a comment in the description for what you guys would like to see more of. We've been dropping lots and lots of videos, trade recaps, all types of videos, educational videos and trade recaps. Feel free to check those out and give us a subscription as well if you really like the video. Peace out. See you guys next time.